There are going to be certain things from time to time that just make life easier. Your gold jumping more than 60% in value in a year, your silver jumping 140%. But there are also double-edged swords making some things easier and other things harder. Now, I came up training with single-edged swords, so it's an analogy that I'm still coming to grips with, but from what I can tell, you're not supposed to grip the blade at all. Saving in gold or silver can be a little bit of a cheat code. It's a plan with a lot of potential upside and a relatively small amount of downside risk, but the key there is thinking about it as savings. And that's easier said than done. When I spun this channel up in 2020, I felt like we were about to see both the reward and the risk increase. So all of my early videos were really just about demystifying it, making it easier to get in so you could take advantage of the reward, but also avoid some of those common mistakes that could sting you if you ever got out. In other words, just limiting your risk. Now, the risk and the reward have definitely increased. It's an understatement, actually. Just look at the reward part. Both gold and silver are now at all-time highs, with annual gains from 2025 being higher than they've been in 45 years. And this reward is so clear that it buries the idea of risk for some people. But this is actually when the risk is highest, not because the rally is over or soon to be over, but because the rally has been so significant that it's changed how people think of gold and silver. Your behavior shifts, and buying behavior matters way more at these levels. So I want to go back to the fundamentals. I want to talk about both. I want to talk about how to limit risk and how to maximize upside, all without making the most expensive mistakes that people make at the top. We're going to get into all of that in a minute, but first, a quick shout out to channel sponsor Summit Metals. If you're looking to buy gold or silver, they've got you covered. If you're looking to sell your gold or silver, they can help you there too. SummitMetals.com. Now, that was a longer intro than normal. Where's the news about silver and gold going to the moon, right? Well, we're going to cover a little bit of macro news here in a minute that's going to line up with one of the best tips on maximizing your upside. But since we're talking about risk and reward, I just have to say that even though we're looking at a bunch of gold on the desk here, silver has more potential for both upside and risk right now. But my plan is to use precious metals as long-term savings, and really that means it's ultimately a plan built around gold. Now, don't get me wrong, silver's a lot of fun right now, but I don't treat metals as a high growth trade. I treat them as savings, and that means that I'm not trying to maximize every move for some kind of quick profit. I'm trying to take advantage of opportunities when they show up and limit my downside when they don't. So really, this is a good time to remind ourselves of something very important. The current price action is not normal. And the wildest thinking is going to revolve around silver. Wildest meaning people are approaching it far differently than they have in the past, expecting it to perform different than it was in the past without labeling it any different than they have in the past, or shifting the plan. They're just focusing on the reward, forgetting about the risk. The primary risk, of course, is just not having a workable exit plan. But before we get to that, let's focus on the entrance. A major part of my plan has always been to buy consistently, but I haven't been doing that. And that's mostly because I hit a running goal already for how much I felt I needed to have, and also because the price gains have just spiked the value of what I already owned. But also, we just came off a huge year, 65% annual gain for gold, 140% annual gain for silver. Buying consistently into a run like that, it's just not easy. It's actually pretty brutal, and we just haven't seen the kind of significant pullbacks that would have made that any easier. So my purchases have been smaller. They've been fractional coins, or they've been series coins that I know are only going to become more expensive because they're limited release. And if you don't have a plan to flip semi-numismatic coins for profit, that's really the only real benefit to buying a series coin. Just keeps you at it. They more or less force you to buy. And over the long term, I think that's a positive. Now, if you're buying gold or silver as savings, you're not trying to time this single cycle. You're buying through it. Consistent buying is still going to be the core of the plan. Price goes up, price goes down. You buy either way. But when we see big gains like this, the plan needs to change at least a little bit, not necessarily away from consistency, but you need to pay more attention to price drops. It's really one of the only ways that you can help control your cost basis. But like I just said, we haven't seen very many. Now, we could see that change soon because every year commodity indexes rebalance, and that forces these large passive funds to adjust their positions. This year, this could be really significant because after a year of huge gains in gold and silver both, like we just saw, that can mean selling for no reason other than the fact that the fund is now overweight in gold. That's in terms of the fund's desired allocation percentage. So when that happens, you can see short-term pullbacks that really have nothing to do with the long-term trend. And this isn't just theoretical. Citigroup says they haven't seen any outsized flows like this one. Think about it. Gold was up more than 60% last year. Normally, they're rebalancing against something more like 9 to 14%. So in other words, we could be in for a dip. Now, none of this affects the longer-term trend. It's really just to say that if you've been hoping for a lower price in your next purchase, or you've been holding off entirely, maybe waiting for a dip, these are the kinds of events that you should be watching. Timing on the liquidation, by the way, it's right now, January 9th through the 15th. And if you're buying to save, there really isn't all that much else to do. Just keep calm, carry on. But one of the things that I've said since the beginning is that buying the right thing to begin with will save you a lot of trouble when you go to sell. Now, I'm showing two things here. I'm showing semi-numismatic series coins and buffaloes. This isn't even about what's best. It's just about what's easiest to sell. And the right way to go here is to buy the most popular option in your area. So the coins of the realm. And if you've ever doubted this, it's just not hard right now to find examples of local shops actually declining to buy certain things. Now, on the upside, there are lots of options today, including selling online to a dealer like Summit Metals, but certain decisions will always give you more options. And nowhere is that more apparent than in the silver space. Now, look, all I can do here is speak anecdotally based on what I'm seeing on the ground, but I spoke with 3 local coin shops this past week, and 2 of them said the type of silver that you had to sell determined if they'd even be willing to buy it. Now, let that sink in for a second because it gets worse. All 3 were willing to buy American Silver Eagles, but none of them would even pay spot. And you can't really blame them because the volatility in silver right now means they're taking a lot of risk holding unplanned inventory that could really go either direction in price. So if you're buying silver for profit and you're waiting for that perfect time to sell, it's just not logical to think that it's also going to be the perfect time for the local coin shop to buy. So I was given buyback offers of $10 or even $11 below spot for generic rounds or silver bars. That was if they were willing to buy at all. Now, of course, your mileage will vary, but at this point, outside of a few props, I really only have American Silver Eagles. So that's what I was most interested in. And one dealer said he would give me spot. Now, that was someone I knew well. If I remember right, spot was right around $78 that day. The other 2 said $75, so $3 under for American Silver Eagles. Now, gold was a little bit different, which makes sense. Gold price swings have not been as violent as silver's, but the local dealers, no surprise, weren't willing to give me spot for anything other than a buffalo or a gold eagle. So these series coins, which should all have some extra premium, meant nothing to the local shops, actually less than nothing. Now, in the case of a U.S. Mint commemorative, most of the shops, again, I was only talking to 3, but 2 of them said they would give me the same as a buffalo or eagle. Now, the exception there, of course, is the Mustang, but remember, the Mustang is going for $20,000 on eBay, so last thing I'm going to do is bring that into a local shop. Now, I've been jumping around here between gold and silver when really the 2 are very different. Can't say that enough. But if you're like me with the ultimate goal of saving in gold, then your silver comes with a decision. Decision on when to sell, when to swap, and I would say a decision at the outset of what to buy to begin with. Because if an American Silver Eagle costs you $10 more per ounce than, say, a generic round, well, you come out even in terms of the buy to sell spread with the 3 dealers I spoke to. Again, I realize that's a small sample, but 2 of those dealers didn't really even want generic silver at all. That's regardless of price. So this is why I've been saying that you need to identify the purpose and act accordingly. Purpose just being, are you holding or are you trading? You need to know the dog's name to call it home. Now, if you're buying silver to swap to gold at the best possible moment, you better be doing it at a level that you're able to ship Or if you're wanting to do it locally, you better have the type of silver that your local dealer is willing to buy. Now, if you're holding, you're giving up that ideal time to exit, but you're also avoiding some of these current conditions that are making it hard to sell. So these decisions are either extremely important if you're watching price, you're looking for profit, or they're barely important at all if you just don't care where we are in the cycle. Now, I'm not making any kind of recommendation on what you should do, but my next big move with physical silver will be a sale. I'm going to be trading silver, holding gold. And because the type of physical silver that I have is American Silver Eagles and mint tubes, I have all kinds of options. I can easily ship them to someone like Summit Metals. I can sell them to a local shop, or I can find a private buyer. And I knew that when I bought them. I knew I was planning to trade them for a profit, so I bought the easiest form of silver to sell quickly. Because I'm still timing this, even though I could profit today. I think I bought those Silver Eagles in late 2024 for $30 an ounce, all in. Now, if you're thinking the same, if you're planning for a profit, planning for a trade, and you have generic bars and rounds and other curiosities, you're going to need more time than that. You're going to need more planning. And I would recommend that you start in on that now. Even if you think like I do that this rally still has a lot of room to run, you're going to need to plan. Now, like I said, none of this is to say that I think the music is about to end. Physical metal just makes a more awkward trade. And I've been bullish enough on silver's short-term potential that I'm also trading it on the brokerage platforms. And really, there's no trouble there at all, and there's no confusion on what that's for. And we don't need to overcomplicate any of this. I would just say that if you do intend to sell at some point, do yourself a favor. Just reach out to a local dealer, email Summit Metals. Just ask about logistics, get a bid price, figure out what you need to do. And that's really just about knowing the exit, but don't let that put you off continuing to accumulate, because even though the least sexy thing that we can talk about here is just your typical scheduled purchases, something like a fractional American Gold Eagle every month, that plan to just keep buying is still very likely to become the most significant part of your long-term holdings. And let's call it good there. Let us know how you're playing this. Are you planning to take some profit off the table? Are you planning to swap some silver for gold? Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.